All right, it's lean times for market debuts. 2022 has seen just 17 IPOs. That's a far cry from the 397 debuts we saw in 2021 that raised $142 billion. Renaissance Capital, though, says we might not return to last year's highs, but also says investors will miss out if they ignore the next few companies brave enough to, in fact, go public this year. For more, let's welcome on Nick Einhorn, Renaissance Capital's research director. Nick, where'd all the IPOs go?
Well, it's really a combination of a few things. Last year was an extraordinary year for IPOs, and like you said, almost 400 of them. And most of those traded pretty well for most of the year, but starting in about October, November, we really saw a pretty steep decline in growth-oriented stocks, which obviously a lot of IPOs tend to be, and especially high growth, high loss companies, like a lot of the big software names and other tech names that have kind of driven the IPO boom in 2021. So really, we're seeing a reversal this year. Things kind of started out very slow because of as people kind of dealt with that fallout. And then I think we may have been ready to see a pickup starting in March, but then obviously the Ukraine news came out, and that's kind of shut everything down too. So it's really, I think at this point we're waiting for a few things to happen. We need markets to stabilize a bit, and especially the Renaissance IPO index that we track that reflects the performance of recent IPOs. Right now, the average 2021 IPO is down. I think it's over 20% from its issue price. So we kind of need that number to stabilize a little bit, hopefully improve a bit too. And then we also need to see a little more valuation consensus between issuers and investors. I think part of the reason we had so many IPOs last year was because valuations were at very high levels in a lot of places. And so companies kind of wanted to take advantage of that. And now we're at a state where they're not going to be able to get the valuations that they got in 2021, especially, again, high growth tech names. So they're going to kind of need to figure out what the right valuation level is. For example, we did see last week, Instacart cut its internal valuation by something like 40%. And that's kind of a sign of the sort of correction that we're going to need to see before IPO activity picks back up again.
Hey, Nick, it's Julie, though. It's Julie. As we're watching these companies delay, what do you think is the biggest risk of doing so, particularly for companies that are already huge in the private markets? Is there any downside to waiting it out?
Yeah, I think so. I mean, most of these companies have a lot of employees with lots of stock options and other assets that are going to want to get liquidation of those, or at least start to be able to realize some of those gains. And I think we've been in the past, decade or so, we've been in an environment where you could kind of stay private and assume your private valuation would keep increasing, just because that there was so much money in VC that has driven the gains in private companies. But I think it's not really clear whether we're still in that environment. And now if you wait too long, you'll get disgruntled employees, and you might not be able to get new money coming in from VCs to kind of keep everybody happy. So, and obviously, you always want to go public when your business is doing well. And so if you wait too long until your growth numbers drop a lot, you start seeing more competition. If you're in a new industry, then I think there's a risk that your company won't be as exciting a prospect for investors as it would be now.
I mean, on the flip side, Nick, we have seen a lot of examples of companies that maybe if they didn't go public too early, but I don't know, the timing has not been great. You pointed out there's been a lot of underperformance over the past year. The class of 2021, so to speak, whether companies had IPOs or they went public through SPACs or did direct listings, I mean, the field is littered with companies that have really seen some poor performance since then.
Yeah, exactly. And I think, again, that's because the valuations that many of those came at, and some of the names on this list, were definitely stretched by historical benchmarks. And particularly in software, for example, we saw many companies coming public at over 20 times forward revenue, which is a very high multiple by historical standards. So I think the good thing is coming up, from a public investor standpoint, there's going to be more room to kind of push back on valuations and make sure that companies are coming at reasonable prices. I think in 2021, there was a feeling of not wanting to miss out on the boom. And what our research has shown in the past is that when the IPO market does slow down, it becomes a much more favorable environment for investors to make money in them. After past slowdowns, we look back as far as the dot-com bubble, 9/11. The average IPO coming out of a slowdown tends to outperform by over 20% over the 3 months, the first 3 months of it being public. So because it's kind of now more of a buyer's market than it was last year, there should be better returns for investors for the IPOs that are brave enough to come out now or in the next few months.
Are there a couple IPOs that are likely to come to market soon that might help change sentiment?
Yeah, it's hard to say exactly which ones, but we are tracking. First off, there's a lot of companies that filed either late last year or early this year that we know are eager to go public. And some of those, I think, are names that could come in this environment that are maybe a little more mature, that are profitable. Bausch & Lomb, the eyewear brand, Fogo de Chão, the restaurant chain, both those have already been public in the past, so investors know those stories fairly well. There's a lot of energy names that have filed, with obviously where oil prices have gone this year, could be attractive. And then beyond the ones that have filed, we know there's a lot of companies that we track that are looking at IPOs. Our private company watch list, which we put together, has over 200 names that we think are actively considering an IPO. And not all of those will be 2022, obviously, but we do know there has been news early this year on companies like Mobileye, Sotheby's, L. Catterton, the private equity firm, that have all kind of talked about 2022 IPOs. So I think maybe some of those have been pushed back from first half of the year to second half. But we know there are companies that want to come public, and I think they'll kind of be monitoring for an opportunity.
All right, we'll leave it there. Nick Einhorn, Renaissance Capital's Research Director. Good to see you this morning.
You too. Thanks.